Good morning, everyone. Welcome to our Wednesday morning open house trading room. My name is Eric Senft. I'm going to be your host here this morning. All right, the market's just opened up. And it looks like we have a little bit of an opening gap. Oh, here, before we get too far into things, I'll give you a real quick overview for those of you who are new to the DTS room. What you're looking at here is the diversified trading system, and it is diversified because we're looking at the market from 3 different points of view. Here in the top left, we have the Hawk Scalper. Top right, we have the Falcon Swing Trader. Bottom left is the Eagle Trend Trader. The bottom right is the Raptor. This is the latest addition to the DTS family. It's kind of a hybrid of the other 3 tools. It incorporates elements of the Hawk, the Falcon, and the Eagle all into one trading tool. All these signals generate the same way, namely, when the signal parameters are beginning to be met, we get a warning dot along with an audio alert. When all the trade parameters are met, we get a triangle and a hash mark. That tells us it's decision time. The markets I'm looking at here are the NASDAQ on this monitor. I'm also following gold and crude oil, but please don't be shy. If there's a market you'd like me to take a look at for you, let me know. All right, I got an email from Russell, and it looks like the market's a little bit soft on the open, so what we're going to do is we're going to take a few minutes here and we're going to review our signals. Now, with each of the tools, you're going to notice that, well, when you first look at it, it's going to look awfully busy. But really, we're not taking every single signal. What we're looking at is we're looking to focus on the high probability signals. So I'm just going to take a few moments here and we're going to go over some of those high probability signals. And let me first I've got a couple what we call cheat sheets. We'll go over the Hawk first. Okay, so these are what the high probability signals for the Hawk look like, the Hawk Scalper. These are the signals that we're going to focus on finding. The first and most powerful signal is the first micro-macro crossover. Very, very high probability signal. In fact, you'll hear me say in the trading room very often that I'll take the signal pretty much without exception. And it's pretty simple to identify. It's when the micro line, that's a thin one, crosses over the macro line, and it's the first signal where everything is in sync. So in other words, the bar colors match, the trend line colors are matching, the filter is also matching, so everything is green. You produce a green signal, that's a very high probability signal. Oh, and Russ, by the way, I've emailed you the Hawk and the Falcon cheat sheets, so you don't need to make notes on these. After that, we get the macro pullback signal. And the macro pullback signal, again, very easy to identify. The only thing that's different about the macro pullback signal is that the micro line goes out of sync. So everything stays in sync except the micro line. It changes color. And when that happens, you know you have a high probability setup. You generate a signal and away you go. Usually when the market is trending, it's going to hit a little period of consolidation. And typically, the market's going to move sideways for 4 signals. And off that 4th signal, we can anticipate that the market's going to move. This is called a 4-arrow consolidation for obvious reasons. In faster moving markets like crude oil, you'll usually only get 3 arrows before the market actually moves. And we can take a look at a crude oil chart here in a moment, and I'll show you what I mean. Typically, after that consolidation period, the next signal that prints is also going to be a high probability signal. You can call this the post-consolidation signal. In this instance, it is also a macro pullback signal, but it just happened to occur after that consolidation period. I should point out that the 4-arrow consolidation is the only signal I will take off of yellow bars. The hawk will also print yellow bars, but this is such a strong pattern that even if I get a yellow bar, I'll still take the signal. And that brings us to the last signal, which is the red bar buy in an uptrend or a green bar sell in a downtrend. So what this tends to occur near the end of a trend. You can use it as an early warning that there might be a reversal coming. You can buy it, or you can also set up to short the failure. And this was a perfect example because you can see why sometimes we would set up to short the failure. Is when this trend breaks down, you can get a fairly substantial move going the other way. Let's just take a quick look at what's going on here with the NASDAQ, and you can see that right now we're actually producing a macro pullback signal. So here's the market. It's still early. What time is it? Oh, we're about 5 minutes into the session. So there's a macro pullback signal. We don't have a lot of structure here yet. I would probably end up risking the trade down to here. This tool that you see me using here on the right-hand side, this is called the Trade Manager. And the Trade Manager, it has two main components. It has the risk component, the risk manager component, and then the stop component, or what we call the profit manager component. The risk component right here limits your risk to a certain percentage of your trading capital. Right now I have it set at 2%. Ideally, anything less than 5% is ideal. And all this does is it keeps you from blowing yourself up. So notice my risk amount here is $220. Well, what would happen if I placed my same entry, but I placed my stop a little bit closer? Oh, well, my risk is still 2% of my capital, in this case, $300. If I placed my stop really, really, really tight, okay, I'm getting a little bit of rounding error. Usually these numbers are closer to the same. So usually I'm always risking about the same amount of money. In this case, it's $400, which is still 2% of my capital. But watch what happens. I can, for that same $400, I can run a really, really, really deep stop. I could risk it down below these lows, I bet. Yep. So what this does is it keeps you from strangling your trade. It keeps you from stopping out too early because you're jamming in your stops too tight. And we'll talk about profit targets in a moment there. So we're working our macro pullback signal. Oh, I guess I could have hopped in on that one. Oh well, I'll show you here a signal in a moment. We also have these different stop strategies. We have 16 different stop strategies. They're all fully customizable. That's what these blue dots are. So right now that's the ATR strategy. I could make it a little bit more conservative if I wanted. I could dial it back. I can change it however I want. And you can do this for all the stop strategies. Like I said, there's 16 of them there. And once this is activated, what this would do is it would manage your trade according to these blue dots. So let's say we bought this first micro-macro cross signal right here. And let's go back to, let's say, the ATR strategy. So let's say we bought this first micro-macro cross signal right there. That's the first signal where everything is in sync after the micro and macro lines crossed. Had I employed this ATR strategy and let it manage my trade, I would have been stopped out right here. Not a huge profit, but the market is getting a little bit choppy, but a profit all the same. Had I used it in the overnight and my first micro-macro crosses right here. Again, this is the first signal where everything is in sync. We had this signal here, but it didn't engage. This signal engaged, so you can see here the stops did a very good job of keeping me in for the better part of this move. So that was, oh sorry, I said it was the overnight. It was actually the afternoon session yesterday's afternoon session. And I'll show you more about those in a moment. Okay, so how's our trade doing? Oh, no problem hitting our high probability target. And now we're up here challenging the overnight high. And it looks like we're going right through that. Oh wow, and we just got a nice signal here on the Falcon as well. Let me show you the Falcon signals now. The Falcon signals working the same way. The same way in that normally we're looking for the signals to all come into sync. So here is our high probability trend change signal on the Falcon. Now, unfortunately, this was not the best chart. This signal normally develops a little bit sooner. But for whatever the reason, this one drifted a little bit and produced the signal right here. So what happens is the trend line changes color. We get this characteristic down, up, down pattern, and then the market signals. So what that shows us is the sellers take control, the buyers try to fight the market back, and then the sellers take the market back again and produce a signal. That's our high probability signal. After that, we get a late filter entry signal. Well, not necessarily in this order, but in this case, we got a late filter entry signal. Very, very powerful signal. The late filter entry signal has the filter go out of sync and come back into sync. Very important. The trend line never changes color. That's what makes it a late filter entry signal. And again, a very high probability trade. After that, you get your basic trend line touch signal. These tend to work out best when they have a little bit of a bull or bear flag shape to them. So if you have a market that's in a downtrend, if it has a little bit of a bear flag type flavor to it, and I'll demonstrate that in a moment, they'll tend to have a little better follow through. So here on the, oops, wrong button, here on the Falcon this morning, well, right here is our trend change signal, and it also happened to be a late filter entry signal. Notice the filter went out of sync and came back into sync, and we produced a buy signal. This is a high probability signal. Let's see, did we hit our profit objective? Oh, just kissed it. Right now we would have hit the break-even target, so our trade would be at break-even if we're using our break-even trigger, but it just kissed the high probability target. Here, yesterday's session, see, this is more how the trend change signal develops. The trend line changes color, and we produce the signal shortly thereafter. So here's our sell signal and a nice progression lower. That was from yesterday. Most of yesterday was quite choppy though. You see the markets going back and forth here without any real commitment. Here's another trend change signal that came a little bit late. Again, typically they develop more down here. These lines that you see going across here, these are the ultimate support and resistance suite. This is actually an add-on. You can use this on any chart, not just the DTS system. So if you're trading a 15-minute chart, you can use it for that. And it gives you the support and resistance lines for today's trading. And no, they are not floor pivots. And no, they are not Fibonacci levels. They are much better. And I'm not just saying that, they are much better. These three lines right here, these tend to be the strongest in the assortment. Well, they tend to set the tone for the day. The gold line is the median line. After that, the blue line to the top is primary resistance, and we have primary support to the bottom. When the market gets above here, the market's going to tend to be bullish as we get into the secondary resistance. If it gets below, it's going to tend to be bearish as we get into secondary support. And like I said, those will work on any chart, tick charts, volume charts, time charts, whatever. All right, so we had that little bit of a rally, and now we got a little bit of a stall. We're about 15 minutes into our session, and still no real commitment on the part of the market. Oh, here, notice, I didn't notice this before, but notice the macro pullback signal here that we looked at the hog. Hey, it's also a 4-arrow consolidation. 1, 2, 3, 4. There you go. There's your 4-arrow consolidation signal. Very high probability signal. All right, we'll put that one on the shelf. Still nothing crazy going on. Thanks, Jim. Jim says the advanced decline a little bit lopsided this morning. 1,800 on the buy, 800 on the sell. Russell is asking, what about the RD line? RD line. Oh, red line here. That's the macro pullback. That's what makes this a macro pullback, right? Like I showed you on the cheat sheet. And I did email this to you, but here's the macro pullback. Everything stays in sync except the micro line. It goes out of sync. That's what makes that a macro pullback signal. High probability signal. Now the signal actually started trading back here, and this is why we don't want to crowd our trade, right? This is why the trade manager is so important, because traditionally what do people do? They say, oh, I'm going to be really careful. I'm going to only trade 3 contracts because I'm a small trader. Oh, and by the way, there's a manual mode here if you want to do that, if you want to set preset your number of contracts. I'm going to be a real careful trader. I'm going to keep my stops right below there. Oh, actually, I've got 5 trades in. Not that it matters. But the point I want to make is the next bar brings you in. It engages the order, and then the next bar takes you out. So you've suffered a loss. Wouldn't it be better to set a reasonable stop, maybe based on the price itself? You know there's support down here, so why wouldn't you cover the trade down there, right? And this keeps you from getting stopped out on a minor little reversal before the market actually continues higher. Now, a lot of times when I'm only trading a single, I'll try to run the trade out a little bit. I won't necessarily take profit on target. But the fact of the matter is that you're going to make a lot more money if you don't strangle your trades. Very important. It's a lesson that most traders never learn. No, Russell's asking, did that red line cancel the buy? No, not at all. In fact, it confirmed it. It confirmed that it was a macro pullback signal. You see, we're only focusing on the high probability setups. Here they are. This is a first micro-macro cross. This is a macro pullback. This is a 4-arrow consolidation. We're only focusing on these signals. I'm not taking this signal. That's not a high probability setup. Look what would have happened had I taken this signal. The market goes up a little bit and then starts to decline. That's why I'm not taking that signal. I did not take this signal. Yes, it worked out, and yes, it would have got me in a few ticks earlier, but it was not a high probability signal. My macro line was not in sync. I did not take this signal here to sell. Why? It's not a high probability signal. It's off of yellow bars. My micro line is gray. My macro line is gray. My micro line is red. My filter is a mess. I did not take this signal. Why? It's not a high probability signal. Right? So that's what we do. We focus on our high probability signals. The fact that let's see if I can find you another one. The market's been so choppy the last few days. Shoot, lots of first micro macro crosses, but not many macro pullbacks because of all this choppiness well, not choppiness, but lack of follow through. I suppose that's the definition of choppiness, isn't it? Okay, here's a macro pullback signal. The trend line turns red. Now I'm starting to get interested in a macro pullback. So here's a macro pullback, here's a macro pullback. These yellow bars are not macro pullbacks. But I have 1, 2, 3, 4 signals. This is a 4-arrow consolidation. Sometimes a macro pullback will drift into a 4-arrow consolidation. And normally there's plenty of momentum once the signal prints, except like I say, these last few days, the market hasn't had a whole lot of momentum to it. But no, the red line, the fact that the line went off color is what confirms the signal. Here's one to the downside. I finally found one to the downside. Here's a macro pullback to the downside. So we have red bars, red trend line, red filter. The micro line goes out of sync. That confirms that this is a macro pullback signal. So we short that. I don't know if this one shows up, but the micro line went out of sync here just for a single bar. That confirms that this is a macro pullback signal. We buy that. All right, so we're always focusing on our high probability signals. We don't just take a signal because a hash mark happens to print. A triangle and a hash mark happen to print. There's certain things that we're looking for. We tried to make the DTS system as non-discretionary as possible, but there is still a minimal amount of thinking involved. I don't mean that. I don't say that to be insulting, because I know traders are always struggling. They're always thinking, you know, show me a clear signal. Well, we tried really, really hard to show you a clear signal. Okay, this is the eagle, and you know what? I may have to go to the crude oil eagle because I'm going to be going back days and days in the NASDAQ to find you a decent example. All right, the eagle is composed of this band or this cloud, and no, it is not an Ichimoku cloud. Yes, I know it looks like one, but no, it's not. And what we're doing here is, again, most of the time we're looking for confluence. We're looking, in this case, because the band is bullish, we're looking for buy signals. And most of the time we're looking for signals that are in sync. So we're looking for green bars, green signal, bullish filter, green filter. I'll explain the squiggly line here in a second. Most of the time with the eagle, you're going to get the highest probability signals off of the hard edge. That's this edge of the band. When the market encounters the hard edge, we always anticipate a reaction with the eagle. Yes, it is that strong. So the market is obviously in an uptrend. It drifts down here to the hard edge. Now we're starting to get interested. We're looking for some sort of reaction. We get the reaction, and then we produce the buy signal. Now, this squiggly red and blue line, this is the ATR line. We're currently against the ATR line, So what we would do is we would actually wait for the ATR line to flip over and the market to come into sync, and we just happened to produce another signal when that occurred, and that would be a signal, a slightly stronger signal where everything is in sync, and now we would look to buy. And you can see that had a very nice progression. I'm just checking to make sure I'm not missing anything here. Okay, so far so good. So that is your basic signal on the eagle. It comes into the hard edge. You look for a reaction. If it's in sync with the ATR, so much the better, and you would look to buy or sell accordingly. We also have a very high probability in an uptrend called a red bar buy. In the downtrend, it's called the green bar sell. This is not the same as the red bar buy, green bar sell in the hawk. In the hawk, it's a mediocre signal that develops near the end of the trend. In the eagle, it's a very strong signal, and I suppose in hindsight, I should have called them different things. Again, what happens is this red bar buy signal occurs when the market encounters the hard edge of the trading band. And once again, we're looking for a reaction. In this case, we're producing red bars, which are inherently bearish, but all of a sudden it seems like the bulls wake up and they say, uh-oh, we got to do something here or we're going to lose control of the market. And so they come back with a buy signal. So we've got red bars with a green buy signal. Very high probability signal. You can, again, one of these signals you can almost take without exception. What is important for a red bar buy signal, though, is that normally there should be some sort of trend preceding it. You're going to see, or I can show you on the NASDAQ, when the market is waffling back and forth and there's no trend involved, that it's a less probable signal. Okay, let's see how we're doing. Oh, we're getting a little bit of a retracement here. I'm keeping an eye on the hawk because we may produce a counter trend signal, but we'll get to that in a moment. All right. Let me see if I can find you a better example so it's less confusing. Shoot, crude oil's been changing direction so quickly. What I'm trying to do is I'm trying to find you a what we call a rule of three signal. Okay, this one's not bad. This is probably as close to textbook as we're going to get. Now, unfortunately, this market has not been in a downtrend for a very long period of time. The rule of three signal is our counter trend signal. It also tells us that the trend may be changing, and as such, there usually has to be a trend beforehand. Right? If there's no trend to reverse. But in this case, we have a little bit of a downtrend. We have a bearish band, and all of a sudden we start producing buy signals. There's a buy signal. There's a buy signal. There's a buy signal. Now they always produce against the band. So bearish band, bullish signals very often, and they always print on the opposite side of the band. The rule of three must always, always, always be preceded by a test of the extreme. And a test of the extreme is just, in this case, the low, a retest of the low and a failure. This is showing you that the market is starting to unwind, that the sellers are starting to lose their grip. They're no longer able to make lower lows. If you see that happen and you get three signals printing against the dominant trend, that completes a rule of three signal. That is a buy signal, and you can go in and you can look to buy that. Oops, yeah, I forgot this is crude oil. You can look to buy that and the market should reverse and head higher. Now again, this is an early signal. Sometimes you may want to wait for the with trend signal, which normally occurs once this trend turns over. But that is the rule of 3 signal. And again, it tends to occur once there's been a trend actually preceding it. This one worked out, even though the trend was not as substantial as we would normally see. Now the rule of 3 is only a rough guide. In this case, we had 3 signals against the hard edge. Sometimes you will only get 2. Sometimes you will get 4. There is no such thing as a rule of 1, and there's no such thing as a rule of 6. But that structure is all important. Let me see, there was one here that had just 2 signals. Sorry if I'm making you dizzy. Yeah, I think it was this one. Okay. Yeah, here we go. So we're printing once in an uptrend, right? We've got an uptrend. We print 1 signal to sell. We print 2 signals to sell. Now, when this one printed, I would already be interested in shorting. I wouldn't short it necessarily from the hash mark in case there's another signal coming and I get my rule of 3. But as a safety, I would probably throw an order in below that low. Why? Well, we've already had our retest of the high and the failure. So we have all the elements of a rule of 3, even though we don't have that 3rd signal yet. Now, if you're unsure, like I said, you could wait for just treat it as an early warning and wait for the trend change signal, which occurred a few bars later. Where are you? Come on. There you go. There's your trend change signal a few bars later. But this would also be an opportunity to short it because sometimes the market will fall off more dramatically from here. But this is still a rule of 3, this whole mess right here. This is still a rule of 3, even though there's only 2 counter trend signals. And the market eventually tailed off from there after quite a bit of choppiness. All right, so those are your basic eagle signals. There's also the trend change signal, which tends to be the first signal after the market changes trend. So your cloud crosses and you get your trend change signal. Away you go. That's also a signal that sometimes you'll try to place. So that's your eagle signals. And now I know everybody's been waiting on bated breath for the raptor signals. So here's your raptor. This is a hybrid, as I mentioned, of the DTS tools. It incorporates elements of all 3 birds into one trading system. You can see we've got the cloud here from the eagle. The whole eagle trend trader is programmed into the filter down here. We've got bar colors like the hawk. And yes, you can change the bar colors. Jim says the advanced decline moving up a little bit. We got 1980 on the buy and 780 on the sell. So prices are heading a little bit lower, but it seems like the advanced decline is starting to dig in a little bit. Okay, your raptor signals are pretty straightforward as well. Again, most times we're looking for things to be in sync. One of our strongest signals, well, here, I'll show you here. This is a better one, is the cloud crossover signal. Very often, or you can consider it the first signal with trend. The clouds change direction. What tends to happen is, pardon me, is that the market will retrace into the cloud, bounce off of the hard edge, and produce a signal. That's a high probability signal on the Raptor, even though we didn't get very much follow through on that one. It was enough to hit our profit objective, but not much more. This one is a little bit more dramatic. So the clouds cross over, the market goes into the cloud, comes out, produces a signal. That one had better follow through. Just like the eagle, whenever the Raptor encounters the hard edge, we expect some sort of reaction. Most times when it goes into the hard edge, it will do what we call a double pullback. So there's pullback 1, there's move number 2. When it comes out of there and produces a signal, that tends to be a high probability signal as well. Here's another hard edge bounce. The market comes in, there's move 1, there's move 2, comes out, produces a signal, a buy signal, and that tends to have some follow through to it. Now the Raptor also has a counter trend signal or an early warning that the trend's reversing, and that's what we call a soft edge buy or a soft edge sell, depending on the circumstances. And sorry, I just got to find you one. Oh, here we go. This is a decent one. Actually, this one's better. Again, because it's counter trend, it has to be preceded by a trend. If there's no trend, there's no counter trend signal. So here's the NASDAQ from a few days ago when it was actually trending a little bit. We get the trend down, and now all of a sudden we're starting to produce buy signals into the soft edge. Right? This is the soft edge, this is the hard edge. From here, we would anticipate that the market's going to retreat to the hard edge. That's our first profit objective. But just like the eagle reversal, the soft edge buy must be preceded by a test of the extreme. It has to. Sometimes it will come quick. Sometimes it'll just dip down for a bar and then continue on its way. That is still a retest and a failure. If it comes back and produces a buy signal, then I would look to buy. But so long as we get that retest, we're good to go. In this case, it's drawn out a little bit more, which is nice for illustration purposes. But this is a soft edge buy. We would look to buy that, with our first target being the hard edge. And the market made a nice progression, and very often it will move a whole lot further than that. So here now we're working on a cloud crossover, looking for the cloud to offer some support and the market to come out of there with a buy signal, and there's the buy signal. All right, so those are your high probability signals on the Raptor. So we're looking for hard edge bounces, we're looking for cloud crossovers, we're looking for retests of lows and failures. This would be a soft edge buy again, and we get a nice little progression. Here's a double pullback into the hard edge. There's 1, there's 2. The market comes out, produces a sell signal. That's a high probability sell signal. See, here's another cloud crossover. Yes, you took a little bit of heat on it, but it would have got you in early on that trade. So they're not terribly difficult signals to learn. Oh, see, here's a soft edge sell. We would have sold that. Doggone it, I was waiting for that. So here's this is a very tiny retest of the high, but still it's a retest. The market is trying to rally. It comes back with a sell signal. That is a saleable signal right there. I would have been all over that. Shoot. Oh well, not the last signal I'm going to miss. This tool right here, this is called the Geiger counter. This is also an add-on, and this works on, again, on any chart. It could be a 15-minute chart, it could be a tick chart, it could be a volume chart, whatever you happen to be using. It's essentially a tape reader. It shows you the time and sales, so you can see there was massive selling here, and that was probably occurring right about here as the sellers loaded up. The buyers weren't able to absorb it, and boom, down she goes. So we've got the tape part, the histogram part. We also have this dial. This dial is great, especially when you're looking to initiate a trade, or even when you're in a trade. What we're looking at is we're looking at the active buying and selling. And if this dial pulls hard to one side and gets stuck there for like 3 or 4 or 5 seconds, that shows you a bias in the market, that the buyers or sellers are really starting to chew through those orders. And you can probably expect the market to move that way. So 1, 2, oh, they were trying. The buyers pulled it over and they were holding it there for a couple of seconds. But ideally, I want to see it hold for like 3 or 4 or 5 seconds. That's a little stronger. See, they're holding. Oh, no, they lost it. But if they can pull it over and hold it for a little while, then we will see a bit of an uptick here. So if we were short from this signal, then I might want to tighten my profit objective in anticipation of a bounce. Or if I'm looking to initiate a signal, if I'm looking to initiate this signal, I want to see the dial pull hard over to the sell side and get stuck there. The needle, which was red a moment ago, is now white, which is neutral, and if it turns green, that would also show a more bullish bias. Darn it, that was a nice little move lower. All right, so what I'll do is, if we don't get a tradable signal here in a moment, I'm going to put a trade on so that you guys can see how all this works, how the trailing stops work, and all this stuff. So now the Raptor here has crossed over. Notice the clouds have changed direction. We're going to anticipate a reversal into the cloud, and then we're going to look for the market to produce a signal. We're going to look for the Raptor to give us a signal there. Oh, darn it. No, they're in free fall. Looks like we got a bearish day today, folks. Nicely done, Jim. Jim said he got 2 trades on the mini Dow, 21 ticks on 2 contracts, and 11 ticks on 2 contracts in oil. Well done. Yeah, this market is definitely bearish today. And they moved a little bit quick through here, so now we're just waiting for everything to catch up. Oh, that's craziness. Look at the Geiger counter here. Sellers just pouring it on, buyers not able to absorb all that selling pressure. We're getting a green dot here on the Eagle, so something is changing a little bit. We might be getting some sort of support coming in here. I would anticipate there's probably some profit taking or something going on. I would. Had I shorted from here, I would be in my parabolic mode by now. I would be running parabolic stops. I would not want all this profit to get away on me. It's going to be a tough trade to cover though because there's not much structure here. Oh, come on. No, they're not going to give me a signal. Doggone it. Not what you want to see in a trade room. This is rare that the market falls off like this without producing a signal. But as you can see, it can happen. Normally what I tell people in the trade room is when the market is falling this drastically, just hit the sell button. Just hit your sell market button. Get in. Oops. I forgot to reset my quantity. Just get in. Unfortunately, we have to cover the trade way, way, way up there. But at least you're in. All right, so again, right about here somewhere with these heavy bars and all this preceding it, I would have started thinking, time to punch in. Just grab a position, see what happens. Jim says, I'm noticing on the Raptor, yellow bar sells and longs are working. Yeah, with the Raptor, you know, the yellow bars are not as detrimental as they are on the Hawk. With the Raptor, we're a little bit more concerned about the price structure and where it's developing as well. All right, well, if this trade can get a little bit of traction, what I'll do is I'm going to turn on the stops, and you can see it actually managed the stops. I guess I better get some sort of stop going here. We'll throw a swing stop in there. And what this does is, right now I'm running the swing strategy, so my stop is above the last swing high. I know, it's an insane stop, but it's necessary. Anything tighter than this is just going to be suicide. That's, again, why we use the trade manager, because my risk will always be contained to a certain percentage of my trading capital. So even worst case scenario, the market jackknifes and goes right back up here, trades through 45.30, I have not lost more than I can afford to lose. Very important concept. One that most traders never get their heads around. Oh, here, we're going to get a first micro-macro cross signal. I'll close this and I'll show you how this is going to work. So we're getting our warning dots. This tells us that the trade is starting to set up. We're starting to get the trade parameters. So I would place my entry there because I know that's where the hash mark is going to print. So now the question becomes, where do I place my stop? Well, watch what happens. If I place my stop really tight, notice the risk amount, $350. That's 2% of my capital. Don't wig out if that sounds like a lot. If I place my stop up here, oh, it's still in that neighborhood. It's $350, $400. If I place my stop way, 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 way up here, oops, I just went out of reach. Trade manager says, oh, sorry, Eric, you can't afford that trade. That's a little bit out of reach for your account. How about now? Nope, still out. What if I go with the crest here in the macro line? Okay, that one I can manage. So what the trade manager is saying is, Eric, you can take this trade. If it doesn't work out, you will not lose more than you can afford. So let's see if we get engaged here. If we get engaged, what I'll do is we'll try to run this out. I'll delete the profit target just so that we can, so I can show you how it will manage the stops. Hopefully show you how it will manage the stops. Okay, come on. They're going to bring me in and then they're going to reverse. I fully expect a macro pullback signal to develop out of this. But hey, it's the demo room, so let's demo. Come on. Come on. You know you want to. Clay is asking a great question. So if you have a swing strategy going with your limit at a 2% loss, how do you complete another trade? Do you wait until you're out of the swing trade? Well, you could. It depends, I suppose, on the size of your account. I think what Clay is getting at is that, okay, let's say you have a 2% loss and you're trading a $20,000 account. That's a $400 risk. If that trade loses, well, then you've got $19,600 left to trade with. So your next 2% loss is only going to be like $390, right? That's going to be your next 2%. It's not that fine of a line. You know, if you took one trade at 2% and you took another trade at 2% and you were even $50 higher than you should have been, that's not going to ruin you. Generally speaking, so long as you can keep it below 5%, you're doing well. And the reason you want it below 5% is statistically, there's a very real possibility you could take 10 losing trades in a row. Now, I've never done it with DTS, but any trader will tell you, yeah, it's possible. You can take 10 losers in a row. You can take 10 stinkers in a row. So if you're like most people and you're risking more than you can afford, you know, a lot of people, I see that all the time when I do coaching with people, they're risking like 7, 8, 10% of their trading capital. And it's like, what are you doing? You know, you're trading a $10,000 account and you're taking an $800 trade. Well, you don't need to be a mathlete to know you do that. You know, if you get stuck in a losing rut where you take 5, 6 losers in a row, you've just blown half your account. That's what happens to most people. If you limit your risk to less than 5%, and like I say, 2% is kind of the ideal, you're not going to ruin yourself. And it does depend on your account size. So if you're trading a smaller account, say you're trading $10,000 account, you're going to be closer to that 5%. I was working with a fellow about a year ago. He was trading a $300,000 account. Well, we were only risking 0.25% of his capital per trade. We didn't even need to risk 2%. The risk, why? You know, he had huge size and plenty of opportunities just by risking 0.25%. Oh yes, so Clay asks, so DTS allows you to be in 2 trades at once? Not on the same tool. Like here on the Hawk, if I fill this Hawk trade, well, actually it does. Yes, sorry. If I could get filled on this Hawk trade, I'll show you. So we're working now into a macro pullback signal. Not there yet, but we will be. Doggone it, still out of reach. So we'll go with that. If I can get filled here, I'll show you. Yes, I can set another order, but I have to let the first one fill. Or I can right-click on the chart and I can set, you know, a live order, just like you normally would with Ninja. Oops, I shouldn't have done that. Let's do it like this. Here we go. Okay, so we finally got a fill. I'm going to delete my profit target. I'm going to delete my break-even trigger. This is technically the first micro-macro cross signal. It's the first one that engaged. After the micro line and macro line crossed, everything is in sync. This is what we call a high probability signal. So now Clay was asking, well, can you set a second order? Yes, you can. So let's say you wanted to enter below the low here for whatever reason, and you want to cover up here. You can set that order as well. And I would just click submit, and then that order would become active. I can also punch into the market. Let's say the market was moving fast and I just wanted to get in and sell it. It's going to default to this quantity up here. So I could hit the sell market button, and now I'm short 2 contracts, and Trade Manager adjusts my trailing stop to reflect the 2 contracts. My break-even trigger also adjusts to reflect the 2 contracts. Oh yeah, no, I know Clay says nice. Yeah, this is without a doubt the best piece of software available to the retail trader. This was Adam's brainchild, and when he first told me about it, I said, how in the world are you going to program that? It's so sophisticated, and hopefully the market will decline here a little bit, and I can show you how it actually rolls the stops for you. Once the stops are active, the reason they did that is that you can look for other opportunities now. This trade is taking care of itself. I can go watch gold. I can go watch crude oil. I don't need to worry about this trade. Even if this trade goes poorly, let's say I bring over crude oil now in anticipation of the crude inventory report. Even if my NASDAQ trade stops out for a full stop out, I still have not lost more than I can afford. And this programming is tight. This programming is really tight. Adam likes to tell people that the programmer who did the coding for this, he actually programs missile guidance systems for crude missiles. That's his day job, if you will. So you know this programming is tight. All right, there's another function here. It's called the OCO order. One cancels other. And a lot of times I'll show this around crude inventory because it's kind of fun. The OCO order, normally what we're looking for is we're looking for a range that we can bracket. Crude's range is insanely tight today. I would not recommend what I'm about to show you, but I'm going to show it to you anyway. So with the OCO order, I can set a buy order, I can sell order, and these orders are live the moment you put them on your chart. So what I have a tendency to do is I tend to place them away and then pull them in where I want them to be. So what I'll do is I'll use the resistance line above and the resistance line below to bracket the trade, and then we'll let the crude inventory report fill this trade. That's a little bit too tight for my liking. But it'll do. So in about a moment's time here, another minute, we'll see the crude inventory report come out. I'll throw the Geiger counter on here so we can watch the order flow. Nope, wrong way. There we go. Okay, they're getting a little heavy on the sell. Look at all those orders on the sell side. There were like over 100 and nothing on the buy side. As we got about a minute to go, this Geiger counter is going to start going nuts. This dial is going to start going back and forth. And of course, we should see prices go crazy as well. Oh, they held the resistance line. So here's the inventory report. Now working on a trend change signal, remember that? The one I showed you, if we get filled here, if this signal moves lower, we should get filled on the trend change signal. Here in crude oil, we should produce a signal right there. And what happens when this OCO, oh, I better get a stop and play. That's not smart. Okay. All right, so notice the other order canceled. I got a stop in with my stop strategy. I can delete my break-even trigger. I'm going to dial this back a little bit more. No, I'm not going to do that. It's going to put my stop on the wrong side. All right, let me see about chandeliers. Chandeliers about the same place. All right, we'll stay with the 4-period ATR. And we'll see whether we get any follow through now on crude oil. Normally, after the inventory report comes out, this market just goes crazy. Not today. Well, like I said, this is a very tight range. I wouldn't normally recommend bracketing a range this tight. In fact, when the market is like this, when it's this tight, what we would do is we would let the inventory report release, and then we would bracket the range. So now that the release is out, you could buy above here, you could buy above 51.35, and you could sell below this low, which looks to be around 50.80. That would be a better trade. Vince is asking, can I have the cheat sheets and Falcon emailed to me? Yes, absolutely you can. I'll give you my email address. Now, one thing I want to point out with what you're seeing here, the DTS system has actually been stripped down a little bit to make it a little bit more user-friendly. And what I mean by that is that, hold on, I just want to get my stop back a little. There we go. What I mean by that is that what you see here, there's a lot more going on in the background. There's about a half a dozen algorithms that have to be met before you even print a warning dot. So even though it may look like a moving average crossover system, it's not. There's a certain momentum parameters that have to be met. There's even price parameters that have to be met before a signal is generated. So it's a very sophisticated system. The DTS system is locked, meaning you can't tweak it. You can change the brick size, but that's about it. The Raptor, and I'm just going to put this on the shelf here for a moment so I can show you. The Raptor is more customizable. You can change things on the Raptor. You can change the cloud sizes. You can even change things on the Raptor itself. You can change how the brick size is calculated. So the Raptor has a lot more tweakability to it. You can change the filter size. All right, so there's a lot that you can play with on the Raptor. All right, so here we got that cloud crossover. We retreated into the cloud as expected, and now we would be looking for some sort of signal to come out of this. We would anticipate our cloud crossover / hard edge bounce. Still not a lot of structure here, not a real pretty trade. Notice here on the Hawk, we're getting our 4-arrow consolidation. It's going to come off of a yellow bar. I would trust it off of a yellow bar. If we can finally see it head a little bit lower. Okay, so there's the 4-arrow consolidation. Well, actually, technically it's 3 arrows. We had 4 signals. This one didn't trip. So 1, 2, 3, here's the 4th signal. We would anticipate, you know, probably something like this. You can see the scalp target, very easy to get to. Not a lot of trouble with the, as far as the scalp target is concerned. But I'm trying to run this out so that I can show you how the trailing stops work. Market not really giving me a whole lot of follow through today. Gold pretty quiet too. Here we'll pull over gold on the Hawk. We worked a first micro macro cross signal here. Got down. Did it hit our target? With gold, I tend to double the profit objective. No, not quite to our target yet. Working a macro pullback now and a 4-arrow consolidation. 1, 2, 3. There's signal number 4. Problem with this one though is we haven't had a good retest of the high, right? So the structure is not quite the way we would like to see it. Nice macro pullback signal here. Nice 4-arrow consolidation right here. Another macro pullback signal. So gold really coming through. And here was the first micro macro cross in the wee hours this morning. But not much since the North American index opened. Got a macro pullback here, went up. First micro macro cross, 4-arrow consolidation, and we're trying to work that one lower. So gold very, very quiet. Like Elmer Fudd like to say, very quiet. Well, while we're waiting for something to happen, if anybody has any questions, or if there's any markets you would like me to see, if you have a pet market you want me to pull it up so you can see what it looks like, let me know. The Russell. Shoot, I knew somebody was going to ask for the Russell. Let me see if I got the Russell on this feed. I got a new data feed. I might get the Russell now. It's trying to load. Okay, I am getting it, but it may just be a snapshot. It may not be the live feed. So here's the Russell on the Hawk, and it's not moving, so I have a feeling the data is not streaming. But they did give it to me the last, yep, okay. The Russell, of course, is going to follow a lot of the other stock indices fairly closely. We had a first micro macro cross signal right here. We had a macro pullback signal here that drifted into a yellow bar, but is still trying to recover that one. Let's take a look at yesterday's trading. Nice little first micro macro cross right here, followed by a macro pullback, which had some decent follow through going into the lunch hour. Vince says, what does it look like on the Falcon? Well, let's go take a look. Here it is on the Falcon with the support and resistance suite. We had an early trend change signal down here around the London Open, and then after the North American Open we had the proper trend change signal, and we're still kind of working that one. I don't think it's gotten to our profit objective yet. No, just got close enough. It would have tripped the break even if you're running the break even stop, in which case you would have been stopped out here on this pullback. If you're not running the break even stop, then you're still working that trade. Here's the Russell from yesterday, a nice trend change signal right here. So the trend line changes color. Here's our little up, down, up pattern. So we have the push that changes the trend line color. We get the bearish reaction, and then we get the buyers coming back. Great follow through. Nice trend line touch signal. Remember how I said the ones that have like a bull or bear flag shape to them tend to be more reliable? Well, this is why. Nice little bull flag to that one. Boom, out she comes. So there's the Russell on the Falcon. Pretty quiet today though. Kind of pinched between the median line and that secondary resistance. And we'll take a look at the TF on the Eagle. And let's see here. Okay, the daybreak lines aren't too bad. You noticed yesterday's session very quiet. If you're looking at your chart and your daybreak lines are like this, you need to adjust your brick size. This is rare. The recommended brick size works for 99% of the markets that you'll trade, but occasionally you'll run into a market where the brick size needs to be adjusted a little bit. Nice little red bar buy signal right there, yesterday's session. The red bar buy signal again out of the London Open. Nice little signal. Go back a couple days, we have our rule of three, but it's only two signals. But it was preceded by a test of the extreme. And we produced our counter trend signal. So you could have bought there, you could have waited for the trend change signal, which occurred right there. Had a hard edge bounce signal right here. This was close enough that I would consider it a hard edge bounce, especially once the ATR turned over. So I would look to buy it there. And then we come back with a red bar buy signal. So a lot of nice signals in the Russell on the Eagle. And last but not least, let's pull the Raptor over here. And you can see from the Geiger counter, the Russell's not streaming for me. I could show you the mid cap. It's going to be the carbon copy of the Russell. For those of you who don't have the Russell in your feed like I do or don't, you can follow the mid cap, the EMD, S&P 400. It's going to move pretty much lockstep with the Russell. Nice little hard edge bounce here on the Russell. Signal produced right there. Again, this is out of the London Open. Another hard edge bounce and a signal. Here was a soft edge sell. Right here, went to the hard edge. Normally, I would have anticipated this one to go further. And then it did. Another hard edge bounce with a little bit of follow through. Another hard edge bounce. This is why the Raptor has two bands, by the way. You have two hard edges to monitor. So A plethora of signals coming here from the Raptor. Another nice hard edge bounce. Another hard edge bounce. You wouldn't have been bored trading the Russell yesterday, that's for sure. A nice cloud crossover. The market retreats into the cloud, comes out, produces a cloud crossover signal. All right, so we'll put that back on the shelf. Yeah, you might be right, Tony. Tony says, I think it was Jim who mentioned the other day that it looks like summer is here. The market seems to be transitioning to the summer slowdown. Yes, it is a lot slower than what it normally would be. What I'm going to do here, folks, is I'm just going to disable my stop and put it back up there because I don't want to get stopped out prematurely. Even though the trade manager rolled my stop, according to the swing strategy, it says your stop should be right there. I don't want to roll it just yet. Yeah, normally the summer slowdown doesn't start until the kids get out of school. That's when things get kind of really quiet, but the last couple of days, oh my gosh. We've seen one decent move for the whole session, and that's that. Russell is asking, what about the first micro-macro cross here on crude oil? I trade the probabilities, Russell. So if I can afford the trade, I'll take the signal. The first micro-macro cross is a very high probability signal. In fact, it's well over 80%. I hesitate to say that because of all the spam email I'm sure you get in your inbox touting the latest, greatest trading system that is correct, 93%, 93.7% of the time, or some stupid number that they throw your way. But it's an insanely high probability signal. I'll take it almost without exception. And you can see it had no problem hitting our high probability target. So like I say, I trade the probabilities. If I can afford a high probability signal, yes, I will take it. Even if it doesn't, to my eye, it doesn't look like it can go anywhere. The DTS system, like I said, there's about a half a dozen parameters that have to be met before a signal is even generated. So there's a lot of stuff going on. All right, they're not going to cooperate. Well, let's see if there's anything going on here that I can show you. No, not yet. Well, you know what? I'll show you this. Technically it's a soft edge buy, but we're already at the hard edge. Not the most attractive signal. I would much prefer to see this bounce and give me my second pullback and give me a sell signal. Now that I've made that clear, I hope, I'm going to show you a signal here on the Raptor. Now, you may have noticed that this tool is slightly different than the Trade Manager. This was called the Trailblazer. And the Trailblazer was developed because we had some owners who were trading some very fast markets. And they said, can you give me a tool that is a one-click entry system? And we said, sure we can. So what happens is when you click your entry and your trade size is determined up here, you can preset your quantity and your targets. So you need to know in advance more or less what your position size should be. But watch what happens when I click the buy button. Oops, let's close that. Let's try this again. There we go. Oops, enable a stop. There we go. With one click of the mouse, you get your order, you get your profit target, you get your break-even trigger if you're running one, and you get your stop loss. So it's all fully automated with one click. So that's the difference between the Trade Manager and the Trailblazer. You still have 16 stop strategies, but you do not have the risk component. So you need to know approximately what a suitable position size is for your account. But like I said, I'm expecting the market to actually come out of here and produce a sell signal. But maybe it'll tick just high enough that I can show you some of these features. They owe us one more move lower, by the way. If you're wondering why is Eric so bearish? Well, I guess they bounced right on it. They bounced on the overnight low, or sorry, yesterday's low. What time did that occur? Oh, that was during the Asian session. So yes, they're bouncing off the overnight low. But if you take it off of yesterday's low, which would have occurred right here, okay, we've breached yesterday's low. Why is that important? Well, when the market breaks a significant high or low, it has a tendency to make two moves in the direction of the breakout. So there's move number one. I'm waiting on move number two. This is why I'm more interested in shorting than I am in buying. The market owes me one more move. And I want to collect. Let's see, maybe I can do parabolics. Parabolics are a little bit more aggressive. All right, we're going to go with the parabolic mode. If we at least tick one bar higher, you'll see the Trade Manager roll my stop automatically. But we're not. It's going to reverse here off of this hard edge. It's going to come out and it's going to produce a sell signal. Let's see, are we getting a sell signal anywhere else yet? No, not yet. See, we're on the hard edge on the eagle. We should produce a sell signal there also. Come on, you know you want to. Oh my, it's painfully slow this morning. The markets didn't liven up until yesterday afternoon a little bit. And today we had that big move right here from the top of the hour. But that's over an hour ago now. See, here they come. They're going to produce that trend change signal, or pardon me, the hard edge bounce. And we'll throw a little trend line on there. Aha! Oh no, sorry. Got a little ahead of myself there. I almost thought they were producing a signal. No, not yet. With the hawk trade, if we can trade down below this low, then I will get more aggressive with my stop. Then I'll reactivate my trade manager and let it roll my stops in. You see, this has got a very bear flag type flavor to it. And as such, I would anticipate the market to head lower. You know how I said I take the first micro-macro cross trade almost without exception? Well, this would be one of those times where I would be thinking, get into yellow bars so I can scrub the order. Get down there, get into a yellow bar, because we don't trade yellow bars as a rule on the hawk. Get down there, come on. See, now it's a macro pullback. It's still wanting me to buy. Give me that yellow bar. Do I have the sell signal yet on the Raptor? No, not yet. Okay, so I'm going to get stopped here in a moment on the Raptor. But if I do get stopped out, I'll look for that double pullback sell signal. So I'll be looking to short. And, well, it didn't move a whole lot, but the parabolics did roll the stops in a little bit. Okay, there we go. So we got tagged on that, which is okay. We kind of saw that one coming. And let's look to short now. Doggone it. Let's see if the Raptor doesn't give us that sell signal. You guys had better hurry up too, because if you did happen to buy in, oh, thank goodness we're into yellow bars now on the hawk. But if you did happen to buy in, say off of this red bar buy or something, this is why we keep our stops far away, right? This is why we let the risk manager control our risk and not jam our stops in ultra tight. There's always going to be an opportunity to adjust your stops. And your stop loss is only a safety net. It's only there to keep you from blowing yourself up. There's the sell signal on the Raptor. All right. So you can either enter with the sell market button, or you can right click and you can short it that way as well. And these orders, again, will be live the moment you put them on your chart. All right. So we got filled. I'll leave my profit target in play this time. I'll leave the break-even trigger in play. And I'll go with, I don't want to stop myself out too soon, but I do want to show you how the stops roll. All right, we'll go with parabolics and we'll keep our fingers crossed. Parabolics are a little bit aggressive for a day like today. I think you need to run a more liberal stop today. But we'll see, we might catch a bit of a break. And we go over these signals and these trade setups every day in the trading room. And of course, as a DTS owner, if you have any questions, that's the other reason we have the trading room, so you can ask questions. You can always shoot me an email. Sometimes I get a little bit flooded with emails, so your patience is appreciated, but I will always get back to you. Come on. Come on, just somebody tap 4508. Oh my gosh, they're being stubborn this morning. So I'm just waiting for that second leg to the downside. It should have more momentum than this. What kind of volume are we looking at here? Well, there's enough volume there. There's 5,900 on that bar, 5,900 contracts. What about down here? Yeah, 4,500 on that one. You may have noticed the width of these bars change. This is the dynamic equivolume bars from Indicator Warehouse. And what makes these different than other equivolume charts is that normally you can only use equivolumes on candlestick charts. But these you can use on any chart. I'm using them on the mean Renko bars that come standard with the DTS system. You can use them on a regular Renko bar. You can use them on a tick bar. You can use them on a time bar, whatever you like. All right, we're trying. We're trying. Come on, get down there. All right, so did you notice how the trade manager is starting to roll my stop a little bit with the parabolic program? And now that we've made a new low here, I can start to adjust my stops a little bit, and maybe I'll go with the ATR. So watch, I'm going to click accept. Oh, there we go. And it automatically pulls the stop down. And now I can leave the ATR strategy to manage this trade. And you can adjust them as the trade goes on. Like let's say you're tired of parabolics and you want to go with super trend. You can preview it to see how it would look. And then you say, yeah, okay, I like that. You click on super trend or accept, and now you have super trend managing your trade. Oops, sorry, wrong button. So we hit our short-term target. We should hit the break even here in a moment, and then you'll see the trade snap to break even, or in this case, break even +1, and you can preset that as well. You can even have a break even with negative ticks. If you don't want to crowd the trade too much. Oh boy, they're really taking their time here this morning. I think we're going to button up the trading room here in a few minutes. So if anybody has any questions, please type away. I would be happy to answer your questions before we go, if there are any. If not, we'll be back next Wednesday. Same time, same station, as they say. And DTS owners, I will see you in the trading room tomorrow morning. If you are following the markets this afternoon, I would anticipate more bearishness. I would be more inclined to sell than I would be to buy. That's not to say we're not going to see another uptick here along the way, however. So if you are short, try to keep your stops a little bit deeper so that you don't crowd the trade. Okay, on that note, have yourselves a wonderful day, and we'll talk to you guys soon. Bye for now.